Hi, I'm Dan Petrozzo, a partner at Oak HCFT. I'm here with Sam Bobley, the CEO and founder at Ocrolus. Many of you may remember Sam from the panel last year. Sam, it's great to have you back. Please tell us a little bit about yourself so everyone will get to know you a little better.
Thanks so much for having me, Dan, and it's great to be back. My name is Sam Bobley. I grew up on the North Shore of Long Island in Nassau County, about 45 minutes away from the city. And my father was a financial technology entrepreneur. So when I was growing up, I was watching my dad build, scale, and ultimately sell a company in the payment space, and I naturally wanted to follow in his footsteps and do something entrepreneurial of my own. I started building Ocrolus in 2014 in my parents' kitchen with my dad as my number one mentor, helping me get the business off the ground. And it's been a great run over the last 7 years. I first met Dan and the Oak team back in 2018 and got to know the team, and it was clear from day one that they were really deeply understood our business and were able to add a lot of value strategically to what we were trying to achieve moving forward. And we ended up partnering with the team in 2019. It's been a fun 2.5 years.
Fun 2.5 years.
Looking forward to what's ahead.
So Sam, when you first started the company, there was nothing on the market that allowed for 100% or near 100% accuracy for financial documents. Why do you think that was the case then, and how did you see the opportunity?
To be honest, we were really surprised when we started Ocrolus that there was no technology on the market to read financial documents like bank statements and pay stubs with a high degree of accuracy. And the company started off as a research project. We looked at dozens of different optical character recognition and data extraction tools. We tested all of them, and we found that even the best offerings out there could only achieve 75 or 80% accuracy. And the reality is machines at that time and still today just were not effective enough to read all of the different formats and different image quality that were submitted as part of ongoing processes. So we had the breakthrough idea to marry machine processes with human-in-the-loop verification and to create a hybrid system that takes the best of machine and human intelligence to achieve perfect accuracy on every single document that we process. And we ended up becoming a category leader in the space of human-in-the-loop document analysis.
That's awesome, and I've been really impressed with the use cases that the company has been able to solve for customers. And one of the things you have to really do is balance the accuracy of reading documents with fairly significant throughput, right? Speed. So what's the magic that Ocrolus has that allows for this really impressive balance between speed and accuracy?
For sure. So our philosophy is that accuracy is king. So by starting with accuracy, we were able to gain a market reputation and credibility about being best in breed to foster high-stakes financial decisions. And then the second component of it is being able to achieve that accuracy in the fastest possible time. So when we first started processing way back in the day, we were telling our early customers, hey, we'll get you data back in 48 hours. Today, for our mature products, like our bank statements, for example, we can process 40% of the documents instantly with zero human intervention whatsoever. And the average turnaround time is around 3 minutes. And we do process 365, 24/7. So we've really optimized the back-end marriage of humans and machines to do this financial analysis work as fast as possible around the clock.
Which I think really set things up pretty well for what happened last year and even earlier this year when the Paycheck Protection program was launched. So Ocrolus, I know, found themselves in the middle of quite a bit of document processing on the order of several million documents, I believe, or several million loan applications. And so maybe just tell us a little bit about what that experience was like.
The Paycheck Protection program for small businesses was a really excellent example of the value of fintech infrastructure. When the government first announced the stimulus program, banks and fintech lenders had to determine how they would go about processing an unknown volume of incoming loan applications in a very short, rushed period of time. So Ocrolus partnered with a number of the leading fintechs, folks like Cross River Bank, Square Capital, Blue Vine, Womply, as well as several others. And the output of the PPP program was a wild success. We used our API infrastructure to help fintechs like Cross River create an elastic backend system that could flex up or flex down to handle a variable amount of incoming loan applications, whereas the big banks who were hiring reviewers, manual workers to do this, were kind of stuck in a supply and demand problem where they had either massive backlogs or highly underutilized workers on the back end. And in 2020, Cross River Bank, despite being a small bank in New Jersey with no branches, ended up becoming a top 3 PPP lender nationally because of the automation that they put in place. The PPP program was then refreshed in 2021 with a focus on even smaller businesses like your Uber drivers or your personal trainers. And at that point, we had gained a little bit of a reputation in terms of our ability to do this work quickly, accurately, and with a robust compliance trail. We were able to take on even more customers for PPP work. And by the tail end of the PPP in spring of 2021, Ocrolus was processing about 66% of all PPP applications nationally, because I think the value of automation and scalability in the back office compared to hiring people and having them review documents page by page, line by line was exceedingly clear. And then the last, perhaps most interesting takeaway from the PPP program was not only were we able to help our lender partners achieve massive scale, we also enabled them to review borrowers in a completely unbiased way. So we just concluded some research with NYU where we looked at the PPP loan population from fintech lenders and compared it against PPP loan population from banks. And historically, banks prioritize their largest customers. If you have a lot of money with a bank, they'll cater to you. And the way that they operated during PPP was they wanted to cater to their highest volume customers, their highest dollar amount customers first, which meant that the nail salon or the pizza store or the local florist was often left behind. Whereas fintechs, they didn't discriminate at all. No matter who came in the doors, they had automated systems to review all the applications. So our research found that Black-owned businesses, for example, were 12% more likely to get a loan from a PPP loan from a fintech lender compared to a traditional bank. And although historically there's been some back and forth about automation and AI and lending models, and does it lead to additional bias or does it remove bias? Our research found that the lenders who implemented AI and automation as part of their backend had significantly less bias in their overall underwriting and selection process. So we were really encouraged about the results on a number of levels.
That's really awesome. So as you think about all that's been done with PPP, and now the company I know has taken on a number of mortgage customers as sort of the next frontier for Ocrolus. I don't think you're going to have quite the same crunch time that you had with PPP, but certainly a combination of, certainly earlier this year in late last year of refis, and then even now just new applications. So how is Ocrolus helping those mortgage customers sort of do the same thing that you helped with the small business lending customers?
Great question. Similar story. We mitigate the problems associated with supply and demand. And in the pandemic, mortgage rates were very favorable and application volume went way up. And it was difficult for mortgage lenders and banks to process all of those applications with a fixed number of resources. That stress on the mortgage system caused mortgage lenders and banks to realize that automation needs to be at the top of their roadmap from a priority perspective. So, now as the mortgage climate is cooling down a bit, and perhaps this next year there will be, a dip in mortgage application volume. Similar concept. If there's, massive amounts of mortgage volume, you end up with backlogs and it takes weeks or months for mortgage lenders to get around to the approval. So with API-based systems like Ocrolus and Plaid and others who have automated processes that used to be performed manually, it gives mortgage lenders a lot of scalability and flexibility, and allows them to focus on their core business and to be more aggressive in terms of direct marketing, opening up more partner or broker channels, and really focusing on top of funnel and underwriting rather than all of the necessary evils that sit in the processing layer, which is really not their core expertise and something they'd prefer to automate if they could.
So in small business lending, so it's kind of interesting. In small business lending, the speed and accuracy of the Ocrolus processes also similar to what you were just talking about with the PPP loans, it changed the end customer experience. So processes that would take days would take now minutes, right? And so you can get information back from the lender about whether you're approved much quicker because Ocrolus is in the middle of this. Are you seeing, and are your customers starting to see the same type of thing in mortgage? Because I think what we all have experienced, or many of us experience in our lives, is that the pain of getting a mortgage and working with whoever the mortgage company is difficult. And I realize Ocrolus doesn't cover everything that's involved in that process, but certainly the things related to paperwork and getting things back in good order, you're helping a lot with.
That's the goal, right? Across asset classes, whether it be mortgage, personal, student, auto, small business, you name it, our goal is ultimately to expand access to credit. And it's we really were in the right place at the right time. When fintech lending first emerged, fintech was a vehicle to serve near-prime and subprime borrowers who couldn't access credit from traditional banks. And at first, the initial fintech lenders were offering that credit at significantly high prices. But for the borrower, it was better to get credit at a high price than to not have access to credit at all. And then what's happened over the last 5 years or so is fintech infrastructure companies like Ocrolus have emerged. And although we are a B2B company, ultimately what we're aiming to do is level the playing field for every small business and consumer so that they have a broader potential options when it comes to access to credit and a lower cost to access that credit. So over time, tools like Ocrolus and Plaid and Middesk and others have really reduced the cost and increased the accuracy and fraud defense when it comes to processing these applications. And that cost reduction is ultimately passed along to the end borrower. So in small business, we've taken a process that used to take days or weeks, and we've shrunk it down where some of our leading customers, folks like PayPal, Enova, Bluevine, et cetera, they literally offer small businesses credit instantaneously in some cases, or in minutes or hours, but no longer days or weeks. We've seen similar success with consumer lending customers like Lending Club and SoFi, and now I don't think we're all the way there to say we're going to be able to offer a mortgage instantly.
Instant
these days.
Mortgage, yeah. So let's turn to the Series C investment. So congratulations on the Series C. Why don't you tell everyone how much money was raised, how you're thinking about the growth of the company, what areas you may focus on next?
Absolutely. So we just announced $80 million in Series C funding. We did it at a valuation just north of $500 million post-money. And we're super excited to take advantage of the market tailwinds around process automation and modernizing credit decisions. The company's had a great run over the last few years. We grew revenue from roughly $1 million in annual recurring revenue in Q1 of 2018 to about $20 million in annual recurring revenue at the end of Q2 of 2021. So about 3 years and 1 quarter, we went from 1 to 20 million in revenue. And we did so in pretty difficult market conditions with the pandemic and a lot of volatility in the lending markets and so forth. But now, as the pandemic is coming to an end, there are very, very clear trends around mortgage lenders and banks and traditional financial institutions looking to adopt similar technologies to PayPal and Square and Lending Club and SoFi and the fintechs who have built very smooth, clean digital borrower experiences. So for us, the Series C investment is to really push the gas pedal and to focus on replicating the success we had with our original fintech lending customer base on a larger scale with mortgage lenders and traditional banks.
Interesting. So maybe just to wrap it up, if you you've been on this journey now 7 years, and there's been quite a bit of digitization that's gone on. It still, to me, feels like very early innings. What's your take on where we're at in the cycle? How much work needs to be done across the rest of the industry in order to start really making the experience from front to back more digital for customers of financial services products?
I think it's an exciting time because the pandemic trends have caused massive acceleration. So I think that folks want to envision this world of open finance where you can port data digitally from one system to another at the click of a button. And we will get there eventually. But for Ocrolus, we're focused on using document analysis as the Trojan horse to really provide this infrastructure layer for lenders to ingest both documents as well as digital data to standardize all of that information and make high stakes financial decisions.
So Sam, it's been a great pleasure for the Oak team to be working with you and your team for the last 2.5 years. And a lot's changed, obviously, in 2.5 years. So hopefully we'll see even more changes in this industry like you just talked about over the next period. Thanks so much for your time, and really appreciate you taking the time to talk to us today.
Thanks so much for having me, and it's been a pleasure working with Oak. We're thrilled to have you guys as investment partners, and we do think it's the early innings and there's a lot of greenfield ahead.